preparing us for the official live. Just want to make sure. All right, you guys. So we are officially live in regards to our home buyers presentation today. Thank you guys for joining us today. I have some great panelists here with me, and we're going to jump right in it for several different reasons. For one, because we respect your time. And two, we just want to make sure that we share with you some great information. So again, my name is Rain Yori, but I go by Rainy like a rainy day. And I'm a realtor in the Tampa Bay area, but I'm also a board certified credit repair consultant. And we're going to share with you the highlights of buying a home. So just a kind of quick little overview, we're going to talk about the steps that's involved with it. It's going to be meeting with a real estate professional, getting pre-approved, searching for homes, making an offer, the negotiation and the contract, being in escrow, the final details, and then the exciting part of having the closing. So the first step, meeting with a real estate professional. There are several different benefits to that. One is that we will be able to assist you through the process and be able to advocate for you on your behalf. Even if you're going to a new construction, it is highly recommended that you still have your own real estate professional. It also allows you to have connections with different partners and different vendors. You'll be able to see some of my top vendors today are my partners that I have. But also too, just because we do prefer or recommend these vendors to you, you do not have to necessarily use them, but at least it'll give you an idea or a starting point. And then also the main thing is it's no cost for you to have a real estate agent. More times than not, it's a free service, unless though, if you're choosing to have a for sale by owner, sometimes that owner may not want to provide the commission or the fee, so you may be responsible for that. But that's usually, little, not as often. So just a heads up, that may be the only time there may be some cost. So what are some ways you can find a real estate professional? You found me, first of all, okay? But if you're not in my area, I also have partners all over the US as well as internationally that can help you. So feel free to reach out to me. Some other ways you can find real estate professionals is word of mouth. You can look for referrals. You can ride around your different neighborhoods and look at the for sale signs. You can use social media. I can definitely tell you that social media has been my number one in regards to getting new clientele of both sellers and buyers. The main thing you want to do is make sure that you can connect with this person. You will be spending a lot of time with them and you will be making a very important purchase. So just make sure that you have a good connection with them. And if you actually have someone that you end up becoming your real estate agent, if you have other agents come about, just let them know that sorry, you're taken. So what's the process when meeting? You're going to go through a buyer's consultation. And during the buyer's consultation, we're going to review the home buying process. We're going to go in depth to what exactly will take place. We're also going to go over any of those upfront fees. Usually it's going to be your escrow fee that's usually due within the first 3 days. There's going to be the inspection. You'll also need to pay for an appraisal fee. Those are going to be some upfront fees that are not included in your loan. So definitely make sure you be prepared for that. We're going to go over your personal information. Unlike some other agents, I am actually going to get a little personal, so to speak. I'm going to talk a little bit about your credit score. I'm going to talk about your debt to income. I'm going to ask you about your incomes and savings just to make sure that we have a stable foundation. And this information too will also be able to allow me to pass it on to my lender so that they will be prepared and be able to assist you more in the pre-approval process. We're going to go over a buyer's agreement. This is going to be your agreement between the real estate agent and yourself. And this is pretty much just a notification that you two are officially working together. If at any time you decide not to continue your working relationship with them, please just give them the due diligence of notifying them that you no longer want to work with them. Because let me take this back. I can't speak for other agents, but what I can tell you is that me as your real estate agent, I am going to go above and beyond. I will be losing out on some of my family gatherings, not being able to do all the things that I want to do, because my ultimate goal is to make sure that you are taken care of. So I want to make sure that you have my 110 plus. And I want to just make sure that I have your loyalty. So I will be presenting you with a buyer's agreement. There is no fee with that, but again, it's just pretty much a written agreement that you're going to give me your loyalty and I'm going to work for you 100+%. During that buyer consultation, we're going to either come up with several different things. Either I'll be able to refer you to a lender, I'll have to assist you with your credit repair. You'll need to work on your savings, or maybe a rent to own option may be the best thing. So once we get through that consultation, it's going to be one of those options. During the process of our meeting, we're going to also talk about the different homes that you're looking for, including your style, some of the prices, as well as some of the locations. We're going to also talk about what are some must-have, what are some of those deal breakers. And then for my couples, I'm not a marriage counselor or anything like that. So I would like for you all to kind of go ahead and talk about what are some of the things that you're willing to compromise on and what are those things that you are not willing to compromise on. So definitely make sure you have that list ready to rock and roll. From that point, you're going to get approved. I'll send you over to my lender. You'll be able to hear from Stephanie shortly. And she's going to want some of the basic information, so such as your pay stubs, your W-2s, bank statements. During this time, pretty much we're going to know what you can afford. And this is going to be critical in order for us to actually do your home shopping. So before you start searching, it's best to get your pre-approval. And then just a heads up, many agents will not show a home unless you are pre-approved. And the main reason is because we want to make sure that you are searching for what you're actually within your budget. Now, got to throw this in there. So just in case, if credit is an issue or a concern, we do and can assist you with your credit repair journey. Definitely feel free to schedule a free consultation so we can look at that. We'll do an onboarding, look at your process, look and see where things are, and kind of get your journey started for your credit repair so we can get your home buying needs. And I do want to just kind of throw this in quickly because a lot of people may not be necessarily ready to buy a home right now, but there are definitely some things you can start doing now to build your credit. It's paying your bills on time, paying your credit cards under the 30%, not opening up any new lines of credit if possible. I actually have 2 programs that I'm partnering with that can assist you with your credit, reporting your credit if you have rent, both Rent Reporters and Boom Rent. Boom Rent do report to all 3 credit bureaus, so that is an excellent program to help you with your building your credit. Some other ways you can do the self-credit builders, getting a secure card, but even with that, just making sure that it's reporting to your all 3 credit bureaus. And then there's also the Experian Boost. So I do want to throw that in there to kind of help you guys jumpstart that. Now, once you've already met with Stephanie, she gave you the approval, we're going to start searching home. This is the fun part. This is where everyone, usually in your family, they're going to start sending you homes. You're going to start seeing homes from every different angle. So what we'll do is we will schedule showings, and this will allow us to help you find the perfect home. I will let you know that a lot of times the seller agents and the sellers, they have a particular time limit. Usually the time frame is about 15 minutes. So make sure you're on time. But if not, just notify the agent and see. So therefore we can kind of see if we can either reschedule or cancel that particular showing at that time. I will let you know that sometimes it can become overwhelming after going to see a couple of homes. So don't get overwhelmed with that. And definitely try to avoid any homes that are little to no interest of you. Because again, after you start looking at so many homes, it may become overwhelming for you. Some of the other advanced searches, I want to let you know that not all real estate sites are the same, okay? So your real estate professional have different tools, systems to ensure that you're able to see available homes that meet your criteria. So there's the MLS, and then there are other platforms. The MLS is the system that all real estate agents use. They are able to put every home on the actual system. And then there are the other programs to where they sometimes pull information from them. I highly recommend that you definitely utilize or kind of stay on whatever tools that your real estate agent is providing for you, because their information is updated quicker than the other platforms. Those other platforms are pulling from the MLS, and sometimes there are delays in regards to their updates. So you may have a home that you're interested in, however, it's still showing still active, but on the actual MLS is now pending and or no longer available. So definitely make sure you get the resources from your actual real estate agent. Sometimes you may not receive a lot of homes, so don't get feel as if your agent isn't sending you all the homes you feel, because sometimes there are homes such as for sale by owners. We don't necessarily have that access. We will have to go through to a different portal. So if there are some for sale by owner homes that you're interested in, that please share those with your agent as well too, and they can reach out to that owner and make the necessary requirements. So again, make sure that you're utilizing your agent's website to kind of keep up with what is actually on the market. Then it's going to be the time of making an offer. Your agent's going to prepare an offer based off the terms that you choose, not what your agent chooses, but what you choose. We will be able to provide you some guidance in regards to what's currently on the market, like what actually sold and those prices, to help you determine the actual amount. But at the end of the day, you are the one that needs to determine what your price or what you would like to offer. I will let you know, definitely right now in this current market, it is like a one-shot deal. So if you try to underprice or you want to go in at too low of a price, you may not have a second time around. So just be mindful of that as well too. After we go from the offer, there's going to be the negotiation and the contract. And just a heads up, in this market right now, it may take a few times to get there, but definitely know that your time is coming. You're on the right track. Depending on the type of market, is going to depend on negotiations. My job as your agent, of course, is to negotiate as much as I can. But right now in the seller's market, I can tell you that not a lot of sellers are willing to give seller concessions. So making sure that you have enough savings to kind of cover everything would be ideal. I also would recommend that during this time that you continue to save and do not make any type of purchases, no big purchases at all, okay? Because you could hinder your possibility of purchasing a home at this time. When it comes to the contract, making sure that you as the buyer, that you are reviewing the contract. In the state of Florida, we have what we call an as-is contract, and pretty much that's exactly what it is. You're receiving the home as it is, okay? There are different cancellation periods and penalties, so definitely make sure that you're speaking with your agent about those, and that will be included on your contract. Your contract will provide you with the timeline of obtaining like your finances, as well as your time to inspect the physical condition of the home. It also will provide you with an estimated closing date. And again, just definitely make sure you know your rights related to the contract. On there, it should give you who pays for what. So that should also be considered shown in your contract. In escrow, once you get to this point, this is when you and the seller have agreed to the price and the terms that your home is effectively held for you for your closing. It's provided to the title company within the 3 days, but definitely make sure you review your contract, because that may vary. Then you have your final details and preparing for your closing. This is when you're going to do your due diligence, conduct your inspection. You have your appraisal by the lender. This is going to determine what your home's worth. So if the appraisal comes back at the sales price as is, this is ideal what we want to happen. If the appraisal comes back over the sale price, this means that you basically have instant equity. It's not coming though, but it can happen. But if the appraisal comes back under the sale price, this is when you want to go back to negotiations. You'll either pay the difference in the price, the seller can come down, or you and the seller meet halfway. But this is what happens when that sale price comes under. And lastly, regardless of the price of the home is value, it will come out either as is or repairs are required. So if the repairs are required, we must go to negotiation to see who pays for what again. the continuation of the final details, you want to review those terms with the lender. And this is when you'll be finalizing your loan, reviewing your documents, and discussing the findings from the inspections. The agent will definitely be managing this entire process for you. Again, do not go out and buy anything during this time, okay? So what usually happens is if you start going out trying to buy things ahead of time, you may fall into what we call the buyer financing fail through. That means that the loan is no longer good. The things are not panning out the way that it should be. So again, avoid buying anything at this time, regardless of how excited you are. And then during this time, you're also going to be speaking with someone about your homeowner's insurance. Then we'll have that clear to close from Stephanie and our lending team. And this is where we're going to start having those transferring of those funds and ownerships. Your title company or attorney typically acts as the independent third party to facilitate those closings for us. And then finally, you're officially a new homeowner, and now it's time to do it all over again for your investment properties, right? So now I'm going to turn it over to Stephanie, and she will be able to share with you guys from the lender standpoint. Stephanie, take it away.
Thanks so much, Rainey. Had to remember to hit unmute. All right. All right, so you can see this now, correct? Okay, awesome. So my name's Stephanie Adams, and this is my baby Snuggies, and we're with the Mission Home Possible team. Basically, we really focus on you just as the homeowner, as the first-time home buyer, getting you in the best possible financial situation. And just in general, our motto is where the dream of homeownership can become a reality. So just in general, the #1 way to build wealth in the US is through homeownership. So we really want to allow you to grow and develop as a first-time buyer and be able to continue your investments into the future by becoming achieving that goal of becoming a homeowner. So our team is here to help you to prepare for those children, prepare for retirement, or whatever your plans are for the future. So let's make it happen together. Okay, now here's the home buying tips. You really want to start saving early. Every dollar counts, and I know that seems like, okay, well, I just went and I got that latte, and that was a $5 latte. And everybody, a lot of people know like the Starbucks effect, okay? That latte could save enough money over a certain time period for your down payment on a home and or your possible closing costs. So every dollar counts. Something that you can also do when you're saving for a down payment on a property, think about OfferUp. Those things that you like but you're not really using, you could use platforms such as OfferUp or Poshmark if you're into clothing in order to continue to save additional funds for your down payment. So we really want you to take a look at your credit and see where you're at. Consistently monitoring it is 100% key. Like for instance, and I'm not saying, go by what Credit Karma says. I'm just saying, if you look at the Credit Karma app, you can see what your payment history was. You can see what your credit utilization is, and you can see how your credit typically is fluctuating monthly. So I'm not saying the FICOs are inaccurate when you go onto Credit Karma, but it's a good tool so you can get a good gauge of where are you at, what could possibly help you. So I take a look at that pretty regularly, and I go, oh, hey, my utilization went up, and so my FICO decreased by this amount. Okay, well, if I just pay it down a little bit more, such as Rainey was saying, the FICO goes right back up. So your FICO is going to consistently fluctuate. So staying on top of that and knowing where you're at is really, really, really important. and make your payments on time, as Rainey was saying, because if you have those late payments in the past 12 months, it can really negatively impact your chances on qualifying for a home, for buying a home right now. So super, super important to make those payments in time. And the reality is, like, we know that things happen in life. Like, we know that foreclosures have happened, bankruptcies have happened. We understand that. But the key is right now, make sure that going forward, everything is up to par if you're really wanting to buy. The next step is exploring your mortgage options, and we'll kind of take a look at what those options are, and getting a pre-approval letter. Super, super important to have that pre-approval letter. And as Rainey was saying, you know, most agents will not show you homes without that letter. And the reason why is because they really want to make sure that you qualify for that home. It's really tough if you get under contract, you do all of that searching, and then you find out, oh no, actually, this is out of my budget, or I'm not comfortable with this payment. So typically when you're going ahead and you're putting an offer on a property, the listing agent and the lister or the homeowner is going to want to see that pre-approval letter and know that you are a solid buyer. Okay, so common loan types. So you've got conventional, you got VA, you got FHA, and USDA. In reference to a conventional loan, typically you want to have really good credit, at least, and when I say really good, I say at least minimum 680 plus. You can, and don't get me wrong, you can do it if you are lower from a FICO perspective, but we have to go by something that's called an underwriting system, and it may not come back approved eligible. And in that case, we would have to take a look at an FHA option. So keep in mind, you know, 680 plus is a range that I would say you'd want to be at. You could possibly go lower. Let's say if you had a larger down payment. Now, on a conventional loan, you could put as little as 3% down, depending upon your scenario. Most people think that if you're going with conventional financing, that you have to put 20% down. That's 100% untrue. However, like I was saying, if those underwriting findings, the amount of that down payment that you're putting in could strengthen your case to be able to go conventional versus FHA. Now, on an FHA loan, FHA is really fantastic for first-time home buyers, especially when you have a little bit of a higher debt-to-income ratio. So, and when I say debt to income, I just mean your debts versus the amount of income that you make monthly. You can have a higher ratio on FHA, and it only requires 3.5% down. Now, on an FHA loan, you could also go all the way down to, as us the lender, we can go down to 580 FICO score. So that really opens up that credit box a lot in order for us to help get you the financing that you're looking. Now, in reference to a VA loan, that's for our military veterans. And of course, we appreciate their service, and it's 100% financing. There is no down payment. There's something that's called mortgage insurance, typically on a conventional or a FHA loan. On VA, they don't have it. We do have to confirm their certificate of eligibility to confirm that they qualify for this VA loan. And then lastly, you have the option of a USDA loan. So when you're looking at a USDA loan, there are income limits. So you can't make over a certain amount, and that's dependent upon your family size. So we typically will go ahead and we'll look at what area you're looking to buy and what's the median income, how many people are in your family, and does the house qualify? Because the house has to be in a more rural area in order to qualify. So we'll look at that property, confirm it does, and make sure that you qualify as well. And the great part about the USDA program is that there is no down payment. You do have to keep in mind, you are going to have closing costs, but there is no down payment on that loan. Okay, so the question is, what type of loan is best for you? It depends on your situation. That's where you have to talk to me, and we can figure out what's going to put you in the best financial situation. Is your debt to income ratio higher? Is your credit higher? Is your credit lower? Did you have a bankruptcy within a certain timeline? Just because there's wait periods dependent upon it, and some are longer than others and some are shorter, and we can get you into the best possible program. So a pre-qualification, it's a really good indication of like you being credit worthy and your ability to borrow, but a pre-approval is more so the definitive words. So meaning that we've actually reviewed all of your documents, such as your W-2s, your pay stubs, your bank statements. We know where the cash to close is coming from. If we've done our due diligence up front, underwriting findings have been run. And then if necessary, we've also added an underwriter to take a look at your loan to make sure it checks all the boxes. So we do both of them, pre-qualifications and pre-approvals. I highly recommend getting pre-approved so you're in the best possible financial situation. So a lot of people are just, there's just so many questions, right? You're like, what do I need to do? Who do I need to talk to? When am I closing? Where is it going to be at? Why do you need certain documents? A big, huge question of the why is, why do you need my bank statements? Why are you asking me about this large deposit that's in my bank account? Well, it really comes down to anti-money laundering laws. So it's not that I really want to dig through your bank statements. It's because we need to show that the funds that you have to close are legitimate funds. So if you have large deposits or something to that extent, or while we're having a discussion about where you're going to come up with either the down payment or the closing costs, we can talk about, hey, maybe I have money at my house and I need to deposit it. How do you do that? And what's the best route? Just in general, based around your situation. And it's just a process that we're going to answer all the questions as we go through, your home buying process. So what's the average down payment on a house for a first-time buyer? So typically, between 3.5% or really 3% and 5%. That's the typical down payment for that first-time home buyer. So really take it out of your head, I have to have 20% down. You don't. You absolutely do not. So what do first-time home buyers typically pay in closing costs? So there's typically an origination fee. So that's typically your processing and your underwriting fee. That's about $14.85. You're going to be paying for your appraisal. Now, it's a busy market. I guess that's the best way to put it. I recommend ordering a rush appraisal. Typically, the appraisal's only about $550 on an FHA appraisal and $450 on conventional. However, I highly recommend ordering a rush appraisal so that you can meet the timeline. So that may be another $150 to $200. And I only say that because your money is on the line. When you put that money into your as an earnest money deposit, you want to make sure that you're closing and we're not held up at all. Appraisers are more backed up than normal. And the reason why is because, so there are so many buyers that are picking up properties right now or refinancing based around those low interest rates. Another cost that you're looking at is your title insurance, your credit report, survey, and then if there's any type of escrow fee. But typically it ends up being, I would say, about 3% of the purchase price. On a smaller loan, let's say $100,000, I would say more like 5%. But if you were looking at 150,000 up, I would say at least about 3%. So what's included in your mortgage payment? So you're going to have your principal, your interest, your homeowner's insurance, your flood insurance, if applicable, because sometimes a property is not in a flood zone, and then your property taxes. So you may also have a HOA that's not included in your mortgage payment, but we will count that based around your debt to income ratios. So you'll see that on your loan documents indicating that you do have a HOA, but it's not included in our monthly payment. Your taxes and your insurance, you are typically going to pay with your mortgage monthly. The only rule where you're not going to be doing that is if you're putting 20% down and you're going with a conventional loan. Then you have the option to do what's called an escrow waiver, and you don't have to pay for those monthly with your mortgage itself. And what happens is we collect enough of your taxes and your insurance monthly so that when those taxes and insurance come due, we go ahead and pay them out and you don't even have to worry about it. So does my credit score impact my ability to buy? The answer is yes, absolutely. And that's where Rainey could come in and help you from a credit repair perspective. If you're below 580 or in the low 600s, I really do think getting your credit as high as possible does put you in the very, very best financial situation, because you also have to think, rates are also dependent upon where your credit score is at the end of the day. And to be in the best possible situation, you do want to get it as high as you can, but it's not mandated that you get it over a certain amount. Just try to get it at least minimum above that 580 mark. Do I need to have high credit to get pre-approved? Again, the answer is no. Will applying for a mortgage hurt my credit? That's something that we hear consistently. So it will have a slight impact on your credit. However, you're supposed to be able to shop around for a mortgage, which means that once you have one lender pull your credit, if another lender pulls it, it's not going to negatively impact your credit again. It's not like there's going to be multiple hits on it. It's usually within a certain period of time. So you can't go and have it pulled 1 month and then 6 months later then have it pulled. But usually if you're doing it within like 30 to 60 days, you won't have an additional negative impact on it. Highly, highly, highly recommend having all 3 credit bureaus pulled. And the reason why I say that is because we can't actually run our underwriting system without having all 3 credit bureaus pulled. And essentially, if you just do a soft pull and you run one credit bureau, we won't even be certain whether you would qualify or not. On all of the loans that I do, I always 100% run underwriting findings to confirm that you are good to go. So please, please, please keep in mind, whoever you work with pulls all 3 credit bureaus and they run the underwriting system. So, and do I need a minimum credit score to qualify? For us as your lender, we require you to be at a 580 FICO. So what documents are we going to need in order to get you pre-approved? Like Rainey was saying, we're going to need your most recent 30-day pay stubs, most recent 2 months bank statements, past 2 years W-2s, and depending upon your scenario, we may need your tax returns. So for instance, if you own your own business, we are absolutely going to need your tax returns. Or if you have other rental properties, we will also need those tax returns. Now, depending upon your scenario, if you are retired and you receive Social Security or pension, we're going to need those award letters. For our veterans, we're going to need their certificate of eligibility or their DD-214. If we have your DD-214, we can pull the COE ourselves, but if you happen to have your certificate of eligibility, just let us know. And then if you're a permanent resident, we need the front and the back of it. If you had a divorce, of course we need the divorce decree. If we're trying to use some child support income, we need that child support agreement. Foreclosure, bankruptcy docs, and business tax returns, 1120s if you own your own business. So it's just dependent upon your scenario, the specific items that we'll need. But the required documents, those are the most common. So what can you do in order to be in the best possible situation? Stay current on all of your accounts. Save absolutely more than you think you'll need, because you don't want to be scrounging around last minute for a couple more dollars. Get your financial paperwork in order. So if you have the opportunity, go through and just pull those TurboTaxes or pull your W-2s, just so it's easy. You just do one personal folder and then you can share it quickly. Be proactive about closing coming up and make sure that you're prepared and you have the time off from work and you'll be able to get off in order to close on that day. Super important. Some contracts say that you're closing on a specific day. Some say on or before, which means you could close prior to that date. And then be prepared for a final credit check. We do a soft pull right just prior to closing, within 10 days. So what I'm saying is, if you opened up a card or an auto loan or something and do not tell me that this occurred, we will know. And we don't want to find it out last minute. So just be prepared to, if for some reason something like that happened, that you let us know so we can add the liability. We really, really strongly recommend you not opening up any new cards, or if you recently bought a car or traded something in and now you're applying for a mortgage, to let us know, because sometimes your credit report may not reflect those recent changes. Okay, the don'ts. Don't go and make any big purchases just before closing. Really bad idea. Do not go and buy that furniture for the house until you've signed on the house, okay? Do not open up any new credit, because then I'm going to need to document that account, and that could also prohibit you from closing on that property. Pay everything on time, especially when you're in the mortgage process on top of it. We don't want to see a sudden late payment while we're trying to close on the property. Cash deposits, you don't want large deposits unless you've communicated to me what it is, where it's from, we can source it, is it a gift. Don't do it. Don't let any family members transfer money to your account. I did run into a scenario where a client allowed them to put money into their account, and it was very hard to show what money was hers versus the family members. It became very, very complex. Don't do it. Avoid changing any jobs during the process, or any other like significant changes. So now that you're under contract, this is really where I come back in. So technically, we would have already had the conversation about getting you pre-approved. We've got your letter, you're out shopping. I've already reviewed all of your documents. You're looking in good shape. Now you're under contract. We need to know like right away, okay, I'm ready to go. Here's the contract. And now we're going to get disclosures out to you. We're going to get loan disclosures. We're going to have you sign everything, make sure everything looks accurate. Then we're going to send it into an underwriter. The underwriter's going to review. They're going to let us know if there's additional items that are needed in order to wrap up the loan. And then we're going to reach back out to you to get those finalized items. During this timeline, we've already ordered the appraisal. So the appraiser is going out there to check on the property, make sure that where the value is at. And also you're going to need to find out about homeowners insurance to see, who do you want to go with, what's the best quote, so that we can go ahead and get that homeowners insurance down. Once we have all of those items and title in, we're going to go ahead and send the loan back into final and hope to get that clear to close and get you to the closing table. So what's a conditional approval versus a final approval or your loan being clear to close? A conditional approval means there's certain items that are left that we need in order to wrap it up. So maybe there was a large deposit on your bank statement and we need to source where those funds came from. Maybe we need a verification of employment from your employer. Maybe we're waiting on the appraisal to come in. Typically, a conditional approval says, based around what we've reviewed, the loan is conditionally approved. We will give Rainey a loan commitment because there is a timeline to have that loan commitment done. And then from there, we'll move on to trying to wrap up the loan and get you a final approval with those last items that were needed. So what does it mean to get a clear to close? So clear to close simply means that you've met all the mortgage requirements and conditions to close on your new home. At this stage, we've fully inspected your documents and verified that you meet all the expectations of the type of loan and amount of the mortgage that you're requesting. So at closing, what do you expect to happen? You're going to be going ahead and signing all of those documents. We're going to work with title to balance on all of those numbers. We're going to know what your final number you need to wire over to title is going to be. And then at that point, we're going to send those documents over to the title company so that when you arrive there, everything is as expected and you're going to physically sign everything at that point and hopefully get the keys to your new home. So how long does it take to actually close a loan? So it really depends on how quickly you work with us, the lender. I would say typically you're going to be ranging between 21 and 30 days. If you get us the items right away and we have that fast appraisal, I would say you could do it within 21. Now, if for some reason you're unable to get certain items or it takes time, I would say within that 30-day timeline. So that's it. We really appreciate your time. And if you guys dream it, we'll help you finance it. And this is all of our contact information. Feel free to reach out if you need any help.
Thank you. Thank you so much, Stephanie. Eddie, you are up next.
I'm excited. Let me see if I can share my screen here.
Okay.
Are you seeing my screen?
Yes.
Okay. All right. We good? Hi, I'm one of the owners of Waypoint Property Inspections, and congratulations to Rainey and her clients and Stephanie in regards to getting everybody ready for the purchase of their homes. That's a big event. It's one of the biggest events in your life in regards to spending money. It is a big ordeal. I remember my first one way back when I was a little toddler. It is a big deal. And one of the things that you need to do when you finally find the home of your dream, you get the contract. You get the contract accepted. You know your loan is good. You're taking the most important step right here today in regards to learning and understanding the process flow of the home buying aspects. The aspects that I'm talking about today is going to be the home inspections and what's important in regards to the home inspections. Again, my name is Eddie Lai with Waypoint Property Inspection. We've been in business since 2005. We are a family-owned company. If you look up our website, waypointinspections.com, not only will you see information in regards to how to schedule an inspection online or give us a call, you'll also see blogs on our website in regards to information you may want to look at in regards to, what is an electrical concern, what is a wind mitigation, what is a 4-point inspections. So there's a lot of information in regards to, things that happen when you have a home. How do you maintain a home? So we're excited to talk to you about that today. One of the things you should look for when you do hire an inspector, and hopefully you do hire Waypoint Property Inspection, but if you don't and you choose someone else, some of the things that you need to look for, are they licensed by the state? You can look at the website, DBPR, to find out if they're actually licensed. There are some people out there, because of how busy it is, that are not licensed. So make sure they're licensed. Make sure that they do have professional liability and E&O insurance for errors and omission in case something that should have been found that was not found. Waypoint carries $2 million in regards to errors and omission insurance. And the association that they're members of, we're proud members of InterNACHI, FABI, and ASHI as well. FABI being the one for Florida Association of Building Inspectors, and InterNACHI, which is one of the most highly rated building inspector associations out there. And we provide a lot of on-the-job training. We started out with Bob Heinz, who was the founder of the company back in 2005. I joined him in 2013, became a multi-inspector firm. And as of today, we have a total of 15 home inspectors. We have actually 5 certified master inspectors within the InterNACHI community. And we're very proud of that. And one of the things you want to look at is the reputations. If you look at our website or Google us, we have close to 1,500 reviews at 4.9 stars. So we're very excited about that. So in regards to the home inspections, when we get to the home, what do we look for? The things that we look for, we call them the 3 M's. They're the things that are, what is maintenance? You're going to have some maintenance. You're going to go to a home that's probably lived in, and you're going to have some maintenance. Maintenance meaning like adding new caulk to a bathtub or sealing up a window. Those are maintenance items. Then you're going to have little minor items where you may have a hole in the drywall that may need to get repaired. Simple things that can get fixed. And it's not that expensive to take care of. Then you may have major items in regards to the home inspection findings. And one of the major items right now, and I'm sure Rainey can attest to this, is that insurance companies are looking at roofs. Roofs are a big concern right now in the state of Florida because of how much fraud that's going out there right now. People are, turning in insurance claims for roofs. And now insurance companies are looking at roofs and saying, you know what, if it's 15 years or older, some insurance companies may want that replaced. So that's something that could be major. It could be an electrical concern. But some of the things that we'll point out, these are some of the things that we point out when we do the inspection. What are some of the major items in safety in regards to potentially not having a smoke detector, something that can lead to safety issues. And like I said, could be the roof as well. Look at the age of the roof, the house that you're buying. Be concerned, be aware of the age of the home that you're buying. If you look at our website again in regards to blogs, some of the ages of the homes, if you're looking into the 1970s, you could have some older electrical. If you're looking into the 90s, it could be older plumbing in there as well. So here's a common item, again.
Hey, Eddie, I'm sorry. Can you change your
is a
screen?
smoke detector major? We consider it.
Can you change your screen? It's just still showing on your waypoint inspection
Oh.
101.
Oh, is it? Uh-oh. All right, bear with me one moment here.
Oh, no problem.
All right, let's see if did that help? Let me stop my share here. Okay. Go back to it. Did that work? Awesome.
Yep, perfect. Thank you.
All right. You only told me halfway through my slides.
I was taking everything in.
Sorry. Sorry. But again, some of the things that may be of concern is a smoke detector. Maybe simple enough, but you know, smoke detectors are important to the home and to the precious lives that we have. We've seen recently in some homes that have had fires. You know, even having a simple carbon monoxide detector. We've had recently, about 2 years ago, we've had a friend of one of our inspectors whose family member passed away in the home because the wife thought she turned the car off, but it was a push button start car and didn't turn the car off, left the garage door open, and the CO from the exhaust went into the house, and they didn't have any CO detectors. So make sure you take care of that. Even if you're living in a home now or an apartment or wherever that you're living, check those smoke detector batteries, the CO detector batteries. Those are major items if you don't change the batteries. One of the things that I tell folks as a hint is when we spring forward and fall back, I do two things as a homeowner. I change my smoke detector and CO detector batteries, and I get my AC unit serviced because, you know, we use our ACs so often here in Florida that we sometimes forget to take care of them. Even changing filters could be a maintenance item, but become a major item if the system breaks down. So on the right-hand side, this is a home that has a crawl space. So if you're looking at homes that are like in Seminole Heights that have what we call our piers that the house is sitting on top of, this is an item that we would look for during our home inspection. We will get under the house and take a look at the crawl space. And as you can see here, this could be a major item because of the piers that are damaged here. So again, it's not always expensive because it's major. Again, a smoke detector, right now you can go buy new smoke detectors and they actually have a 10-year battery life. So we do recommend them that if you do have a home and you do have smoke detectors and they're starting to look yellowish, it's probably time to change them because they actually do have a service life between 7 and 10 years. Minor items, things that are cosmetic in nature, you know, generally don't impact the purchase of the home. You know, like I had said, you know, you may have cracked tiles on the floor, you may have a hole in the wall in regards to a drywall. You may have some minor cracks in the exterior stucco of the home if you have stucco. You know, those minor cracks can be minor, but if you don't seal them up and take care of them and paint, it can potentially become a major item when it causes some defects within the wall itself. So again, minor items is things that are cosmetic and things that shouldn't impact the home, but you want to keep an eye on it so it doesn't become a major item. Here's something that could be minor, you know, like if you look at the upper left, a garage door opener without the light cover, that's a minor thing. Many people have that. And then doors that don't latch to an office, you know, that may need an adjustment, or you try to close it and it opens, what we call ghosting, because it just opens all by itself. You know, that just needs an adjustment. So those are just little minor items. Will we report them? Potentially, if it's a concern, but typically these are things that we'll show you during the home inspection and when we do the summary with you as well. Maintenance recommendations, again, tips to the extended lifespans within the home or the system. And again, we do recommend getting your HVAC systems taken care of at least 2 times a year. Spring forward to get ready for the summer season because it is hot, and then fall back and get the system clean so that when you do turn on your AC, your heating unit for the 2 days that you need it in the winter, that it is operating properly. So those are maintenance items, but if you don't do them and don't do them according to the manufacturer's specifications, it can cause a major impact in regards to failure of the AC unit itself. The expectations of the inspections. One of the things that we do, what we call our driveway speech, when you come to the home inspection and you meet one of our home inspectors, they will give you what we call the driveway speech. We will tell you that the home inspection is strictly visual, it's non-invasive. However, we will get into a crawl space. We will open up the electrical panel. We will get in on the roof. We will get into the attic if all of those things are accessible. Sometimes those things are not accessible and we may need to come back. So, we want, Rainey's really good about letting their sellers know, hey, you know what? We're having this inspection. Please make sure we have access to all of these items so that we can do a thorough inspection on the day of the inspection so that we don't impact the lives of the sellers and the buyers so that we can all do it all at one time. We consider ourselves like general practitioners, just like you go see your family doctor. If we see something concerning in regards to electrical, we will recommend you to a specialist such as an electrician. Don't just, don't be satisfied with Joe home handyman to fix a roof. Sometimes that could potentially be simple, but we do recommend getting a specialist, a roofer, a licensed plumber, a licensed electrician, a licensed HVAC company. Okay, and we don't quote repair prices only because it's just like going shopping anywhere, whether you go to Target, whether you go to Walmart, or you go to Publix. Cereal costs different in different places, and that's why we don't quote the prices. But you get the quotes, and we do recommend, just like anything else, get at least 3 quotes. The home inspection is not a code inspection, so we don't go and say, oh, you know what, this failed code 1, 2, 3, 4, 5, 6. We let you know anomalies. We look for things. We look for what we call the 5 points. We look for the roofing, the HVAC, the electrical, the plumbing, and then we also try to find moisture. If we see a lot of moisture around the windows, we'll take a look below the windows to see if there's any moisture. We'll look under the sinks if possible to see if there's any moisture, okay? And one of the things is that the home inspection is the time of the inspection. It's a freeze frame. It's whatever we find at the day of the inspection. Keep in mind, some days, a storm like Ida may pass thereafter and cause some damage that we don't know about. We've had clients come back to us saying, you didn't tell us we had a hole in the roof. I said, wow, if there was a hole in the roof, I think I would have seen it. But the storm, I believe it was a recent storm, I believe it was Etta, passed by and it knocked the tree limb down from the tree. So we do recommend that trees be cleared from the roof line so that storms don't make that major damage. And confidentiality is serious, and we take that seriously, and we only report back to our clients and to everybody that they give us permission to talk to. Here's what we mean by non-invasive, and I'm sure when you go out to do your you're going to see homes like this, and in the upper left hand picture, there's in the back there's a gray box. That's the electrical panel. I'm not going to be able to get to that, so that's one of the things, that's one of the key elements when you're looking at a home with a garage that's full of all these items. And typically you're going to see this because people are clearing out the main part of their home to make it look real pretty. And then the major part of it, which is where the electrical, the water heater, the air handler may be, I may not be able to get to it. So again, it is not invasive. You know, our guys won't move a lot of this stuff. You know, we may move a simple stuff, but we won't move all of this just to get to the electrical panel, because, you know, we could hurt ourselves or we could damage something that may cause the homeowner to come back to us on. And on the right-hand side, as you can see, I can't see that water heater. And the other thing that you don't want to have in front of the water heater is a lot of chemicals, especially looking at this water heater with the metal pipe on top. It tells me it's a gas water heater, which means, you know, there could be fumes, there could be a fire and chemicals around the water heater that's gas. Is not a good suggestion to have. Types of inspections that we do inspections for the buyers. We also do home inspections for the sellers that want to do a pre-listing inspections and want to know, you know, what could be the concerns of a potential buyer coming in. We do all phases of new construction, from the pre-pour of the foundation all the way to the final inspection, to the home warranty inspection as well. We also do disaster inspections where, you know, a storm comes by and it could be a concern for the homeowner that they may have some roof damage. We do 4-point insurance inspections. That's typically for homes that are 30 years or older, just to let the insurance company know that the home is insurable based on the 4 points, which is the roof, the electrical, the AC, and the plumbing, making sure that everything's in good working order. If a home has a new roof, you may want to have a wind mitigation, what they call a windstorm mitigation insurance inspection, and that could potentially get you discounts on your homeowner's insurance. We also do other standalone or within the inspection itself. You may go into the home and you may smell it being musty, or you see some things that may look like mold under the sink or at the AC unit. We can do testing for that. We also test for radon gas as well, because radon is the second leading cause of lung cancer throughout the world. So we do test for radon gas. So those are the things that we typically do on a home inspection. I'm sure we could talk more and more. I could talk hours and hours about it. But again, the most important thing for you is that you are taking the most important step in your lives, which is purchasing one of the biggest purchases you'll ever make in regards to a home. You know, get the right company to do the home inspection for you. You know, look at the seller's disclosure to see what has happened in the house before. What are they actually letting you know in that regards? And I believe Stephanie talked about, you know, military and first responders. For those that are for military and first responders, we do give discounts for the home inspections as well. Our promise is that we will give you the reports the same day. We will have forever follow-up. We will, you know, anytime you have a question in regards to your home. I had a client that called me up from 5 years ago, and he told me, he goes, "You told me my roof would last another 5 years and it's starting to leak. Who do you recommend in regards to getting a new roof?" We also have the ability, if you look at our website, if you do the home inspection with us, we partner with First American Home Warranty. That'll give you up to $125 off your first year of a home warranty. And I have home warranty myself because it only takes one thing to happen, like a refrigerator, that's going to make up for the $400 that you may spend for the entire house. So really think about a home warranty, especially during the first year. Again, take a look at our website for more information. We do have over close to 1,500 reviews in Google at 4.9. If you do decide to move forward with a home and need a home inspection, we hope you think of Waypoint. Thank you so much. Thank you for your time.
Thank you so much, Eddie. We really do appreciate that information. And I can definitely vouch for Eddie and the team at Waypoint. They were so amazing for my first time home buyers, and just the information, the questions. It was very nice to know, and definitely appreciative to know that they were there to walk her through her home buying process. So now we're going to have Miss Erica to take it away for us, and it's going to talk to us about the home insurance process. Can't hear you, Erica.
Okay, hello?
Yep, there we
Okay,
go.
okay, cool. All right, sorry about that. Okay, let me get my PowerPoint pulled up for you guys. 1 second. Okay, so today, obviously, we're going to be talking about homeowners insurance, and I'm from Bright Beacon Insurance, which I do own with my sister Maya Hill. And what I'm going to start with is just the basics of what homeowner insurance is. So everyone should know insurance is there to protect your house and your contents from any losses or unexpected events that could happen. And those things could be fire, it could be wind, hail, it could be theft, it could be water damage coverage, which is usually a buyback. And I could always explain that in more detail for anybody who has questions.
Erica, were you able
yeah.
to share? Did you share it?
Hello? Oh, share the.
Your PowerPoint?
Oh,
yeah,
no.
were you able to?
Oh, no, I don't think so. Hold on. I don't know if I went. Hold on. Here we go. Can you see it?
Yep, there we go.
Yeah,
Okay.
okay, cool. All right, so okay, so 6 standards of homeowners. We have the coverage A, which is dwelling, your coverage B, which is other structures, C, D, E, and F, which I'll explain each on the next slides. So we have your dwelling, which is your home, your property, and what the insurance companies base the value of your home is what it costs to rebuild it. So the replacement cost. And that is what they will look at if there was a total loss to your property. And other structures is meaning fences or sheds or anything that's not connected to the dwelling or your home, the property, that's when that would come in. And then we have coverage C, which is your personal property, your contents, anything that I like, or what I like to say is, if you turn up your house upside down and whatever falls, that's your contents. Okay. And then we have liability E, medical pay F. Okay. So I guess for liability, what I can say, I had an example where I was younger and I was jumping on a trampoline with my friend, and they put water on it and double jumped me, and I fell off and hit my head on a piece of wood. So that wasn't great, but that would be a good example, as we could have potentially filed a claim for that. You know what I'm saying? So that would come in handy for any legal expenses, while the medical payments is for any injury that the individual could have sustained. And now I'll just go really quick on the deductibles that homeowners companies have, which is what you would pay out before the insurance company would pay. Now there's different options, and different companies will give you a range of deductibles, while others will give you only a few. So the universal deductibles, I would say, is the 1,000, 2,500, and 500. And your hurricane deductible is a separate one, which is the percentage, the 2% percentage of the entire dwelling, the house that we spoke about. Now we have, is insurance mandatory? Now, like Stephanie was saying, if you have a mortgage, there you go. You need to have the insurance. If you don't have your own insurance, that mortgage company has the right to go ahead and force place or lender place your insurance on your home, which is usually a little bit more expensive, and there's less coverage to truly protect you as an individual and the things that you have. And I believe and that's one of the biggest assets you can have and own. And as I say here, it's highly recommended to always carry it if your home, even if your home is paid off, because it is one of your biggest assets. Okay. And if not, you assume all responsibilities to go ahead and basically essentially self-insured. Okay, so just like Waypoint, what Eddie was saying are 4-point inspections and wind mitigation inspections, and he went pretty in detail about that already, and the important things that they look for. And so he's good on that. And then there are discounts as well, like the burglar alarm and fire alarm that Eddie was talking about. That's really important for the house, and the many stories, that examples that he was able to give us. But you can also get retiree. You can get, if you have substantial home improvements, if it's in a gated community, if it's a paid in full policy, and those wind mitigation credits because of a new roof and what it is built to code on. Okay, so lastly, this is a question that I've gotten a lot, is flood, and flood insurance is totally separate and it does not cover your home. So that needs to be purchased separately. So you could either could be mandatory if you're in a flood zone, or you don't, and then you don't have to have it if your lender doesn't require it. Now, would I suggest it? Yes, because in America, flooding is one of the biggest national disasters. So even though you're not in a designated flood zone, that doesn't mean you're not going to be at risk. And so that's a lot of information you should keep to know. And you can always ask me or any of us to explain that in detail and how that difference is. So this was pretty quick and to the basics of insurance. Okay, so any questions or anything, you guys can call us or visit our website and all that good stuff. And we are Bright Beacon, and my sister Maya Hill, she wanted to say hello, and we both thank you guys for this opportunity. So yeah, there we go. I'm all good.
Thank you so much, Erica. So our last presentation is actually a video from one of the title companies, Collection Title, with Rob. So let me get that playing for you all.
Hello, Rainey and her beautiful clients. My name is Rob with Celebration Title Group. I'm so happy to be joining you all today to teach you a little bit about title and what that means for you as a buyer and potentially one day as a seller as well. You know, you're not going to be as involved in the title process as a buyer. However, when you are ready to sell your property, and of course, Rainey is your agent, you're going to be heavily involved in the title process. So this is a lot of great information that you're going to want to know, so you can make it as smooth and easy a transaction as possible for all parties. So I'm going to go ahead and share my screen. There we are. And now you should be able to see the deal or no deal screen here. So let's get your deal to the closing room. So at Celebration Title Group, we're the home of the original confetti cannon closing. As a buyer or a seller, we have this great opportunity for you to create content for whether it's your social media or just send stuff to your friends and family. And we do a confetti cannon at the closing. It puts smiles on people's faces that you've never seen before. It's amazing. It's a really exciting way for us to end the transaction and to make sure everyone's home happy. So here's the timeline for how it works. This is, again, mainly going to be on the seller side, but this is how it's going to go. We're going to open the file first. We're going to run a title search, and we're going to finally get the title commitment once the title search is done. Once we get the title commitment, we have to start clearing title, which is a very important process that we'll go over. We're going to talk a little bit about homeowners associations and lender compliance and lender communication, and also what the settlement statement is, and closing and post-closing, what happens once you're signed and everything's all said and done. So first, opening the file. So the first thing that we're going to need from the agent is the listing information and contract. You and Rainey are going to be in a huge amount of communication during this time. You guys are going to be receiving offer after offer after offer. And what we do as a title company that separates us is that we do the title at listing versus when the contract comes in. So if you are selling your home and you put it up for sale, we'll start title at that time, versus most title companies, they'll wait until the contract is in before they actually start title. Reason being, it's going to give you a little bit more of a competitive stance for your property. It gives you a little more negotiation power when you can say, hey, look, this title process, it's all clear, good to go. This should be a quick turnaround. And you should be, as a seller, saying to the buyer, you should be able to have this home, in 30 to 45 days, no problem, because this is already cleared up. Our title company has taken care of it. And that's something that we take pride in and make sure that we want to offer to our agents, and, a value asset that we provide to them. So it makes it easier for you as well. The title search and title examination process. This takes normally around 5 to 7 business days. And what this is it's going to be a full search for any issues that are in the chain of title. So, not just issues, but also it's going to show, current owners, transfers on title, mortgages and satisfactions of records. And it's also going to show any mortgages or judgments that are on the on title. So as a seller, if you, had your roof repaired, right, and it cost you $40,000 and you didn't pay it, and that goes to a judgment, that's going to show on your title search, rather. If you at one point deeded the property to your nephew or your niece, that's going to show on the title search as well. So again, this is something that you really want to be communicative about with your agent, because anything that you have done with that's going to affect the title on the property, we're going to find it. So you want to make sure you're letting your agent know ahead of time, so we can go ahead and start cleaning those things up as soon as we can. So there's a few things that will affect the length of pulling title and doing the title examination and clearing title. And the big three are going to be divorce, foreclosure, and bankruptcy. Again, please be communicative to Rainey. You want to make sure she knows all of these things ahead of time so she can communicate it to us. If you, are going through a divorce, went through a foreclosure, had a bankruptcy, these things do kind of expand the timeline a bit for the title clearing process. And if you tell your agent upfront about these things, it's going to make everything way easier for us as a title company. So please make sure you're being communicative and letting us know ahead of time. We've had issues before where, a seller will say that they're divorced, but in reality, their wife or husband have just been separated from them for the last 10 years, but they haven't signed the paperwork to get divorced. That can be an issue when selling the property. So please let Rainey know of this and make sure that we are made aware of this as well, because this will impact the length of the title examination process. Now, documents that may impact the usage of the property, easements, restrictions, agreements, association rules and regulations. All of these things, again, you may not even be aware of, right? These are things that we'll find on the survey or we'll find out with the HOA afterwards. But again, these can expand the title clearing process. So if you know about, any easements or restrictions, please just let us know. Again, we'll find it eventually. So letting us know ahead of time is definitely something that we want to do. So what do we do with all this information? So we incorporate it into a document called the title commitment, and agents should be able to read, and it's going to show exactly what needs to be cleared for this property to be cleared to close. So if there's a bunch of easements and restrictions on the property, those are going to have to be cleared, and we're going to have to take care of those. Or if there's something with the HOA that we have to take care of, all of that stuff has to be taken care of before we're able to close on the property. Otherwise, the closing is not a legal closing. So, if you do hear your agent tell you about, if you do hear Rainey rather tell you about, we're going to have to push the closing date back. There's some issues with the title, or there's some things that have to be cleared that are taking a while. Just be cognizant of that. And that's something that the agent doesn't have control over. That's something that we don't have control over. Sometimes we're trying to clear stuff with counties that take forever to do everything. So just be cognizant of that, and be understanding during the transactional process that things may take a little bit longer than you expected. We try to get everything done, as quickly as possible, but it's not always the case, unfortunately. So the title clearing process, at closing, all the title requirements noted under Schedule B1 must be satisfied, and your agent should be able to provide you with the title commitment and explain it to you. So Rainey will explain what's in the B1 and what must be satisfied. Any payoffs or estoppel letters must be ordered as well. So if you as a seller have a balance on your mortgage, we'll have to get that from your lender. Estoppel letters, those are letters from the homeowners association telling us what needs to be satisfied with the HOA. So if there's any past dues, if your grass is 9 feet long, you might want to clear that up before you sell the property anyway, but we will find out about those. And the good thing about that is that if you do have past due HOA or past due taxes, we can take that directly out of closing. So you won't have to pay up front, which is good. It will just come out of the closing, out of the net that you get for the sale of your property. So also, again, property taxes, judgments, associations, any exact amounts, those will also come out of the net. Closing delays, probate, divorce, bankruptcy, foreclosure. We spoke about this. We want to make sure that we're getting all that information up front. We will have to get divorce paperwork from the county or from the attorney that handled the divorce. Bankruptcy and foreclosure, we obviously know that's an issue. We can make sure that we're getting all of that done ahead of time so it does not delay closing. Probate is another big one. If you are a seller and you inherited this property from your second great grandfather or whatever, let us know, please let us know, because we need to make sure that that the property has gone through the correct channels through the probate system, that you actually have a legal right to sell the property. We've had issues before where that hasn't happened, and it causes a big stir up. All right, what happens if there's a homeowners association or condo association? Again, we're going to order the estoppel letter, which is just a letter saying what needs to be done for the property to be sold, and what the lender or what the HOA requires. So any maintenance amounts and frequency. If you pay quarterly or monthly dues, we'll find out about those, and we'll see where you are as far as balance goes. Pending or levy assessments, violations, deficiencies, approval requirements. Some HOAs do require the buyers to be approved. So that could be something that you come across as a buyer or a seller. So you want to make sure you have all your ducks in a row as a buyer. So if the HOA does require approval, that we are able to seamlessly do that for you. Lender communications, there are strict guidelines that we have to abide by for buyers when it comes to the lenders. So when we're communicating with the lenders, we want to make sure that we're doing everything in a timely and secure manner. That's both from you, from Rainey as your agent, from us. There's certain requirements that we have to abide by. And our service teams work closely with the lender to make sure the requirements are satisfied well in advance of closing. That includes your closing disclosure, any balancing that needs to be done. We're going to be in full communication with the lender on this. So measures implemented to support timely delivery of the closing disclosure. That's prompt ordering of any title searches, estoppel letters, payoffs. Those are going to be done by us, so you guys don't have to handle that. There will be times when we are asking the client for information, you being the client. Normally we would go through Rainey for that, but sometimes it's easier for us to just go directly to you as the client. So do expect some phone calls from the title company. It's usually standard documents. If we need like your social security number or any of that stuff, likely we'll go directly to you. And if we can't hear from you, we'll get to Rainey first. And the settlement statement. So the settlement statement is going to be the final statement that you are going to receive at closing. The settlement statement is basically a receipt for all of your debits and credits that you will be paying for, whether it's a buyer or a seller. It actually has two separate columns, and Rainey, as your agent, she'll get this a couple days before closing, and she will explain exactly what everything is that's on there to you. Don't feel the need. It looks a little confusing. Don't feel the need to study it or anything like that. She will show you exactly what's on there, what is missing, what should be taken off, whatever if there are any issues, she'll be the one to tell you about that. You know, obviously we do the best we can to make sure they're correct every single time. But you know, every now and then maybe a number gets put on there that shouldn't be on there, or a number is left off. So just make sure you're communicative with your agent, with Rainey, and make sure that you are double checking those numbers and triple checking those numbers, because you will be signing that paper at closing. Seller documents, we're going to be preparing all of those. So if you are a seller, it's very little involvement from the actual client, from you as the seller or the buyer. You know, Rainey and the title company and the lender, we're the one that takes care of the bulk of the work. You may be getting asked questions for us to effectively fill out our paperwork, but everything is going to be taken care of by us. So you need not worry, I promise. And what happens at closing? So the buyer and the seller are both going to be signing the closing documents. The seller can sign in advance, but the buyer can't sign in advance. So just be cognizant of that. Normally, if you have a closing date as a buyer, that's going to be the date that you are going to be signing the paperwork. As a seller, you are offered the opportunity to pre-sign. So, you know, if you're going out of town and you know, your closing date's on Friday and you're going out of town on Friday, we can take you on, you know, Wednesday or Thursday and pre-sign you. But the buyer must sign after the seller in that case. Settlement statement, again, will be signed by all parties, and the title company, us, will disperse the funds. So once everything is signed, we'll upload it to the lender and they will authorize us for funding. And that's when the money basically switches hands. We're the middleman in that sense. And the funds will go to the seller, and the buyer's you know, loan will be opened up. And of course, at closing, you're going to get the celebration experience, right? I talked about this earlier, the original confetti cannon closing. We shoot one off. It's a lot of fun. If you want, check us out on Instagram at Celebration Title Group, and you'll see a bunch of examples of what I'm talking about. It's a whole lot of fun, and you know, you're going to get a closing gift as well. So we want to take care of you as the client, and also take care of Rainey as your agent. All right. You don't really need to know too much about the real estate commission, but your agent will get paid the same day, which is fantastic. If she takes care of you, which I know Rainey will, you want to make sure she gets her funds, and she will with the programs that we have in place. And post-closing, the deed, mortgage, they're going to be recorded in public records. So you as the buyer, obviously are going to be getting those. Those are normally taking 4 to 6 weeks from the counties. It's just how it works. Government bureaucracy, stuff takes a little bit longer, and you will be receiving the original recorded documents in the mail. So just keep an eye on that for the next 4 to 6 weeks, and after your closing, and you will be receiving those. We can also scan you all of the documents, provide you that copy, basically right at closing. So if you decided that you wanted to have the documents for your records, you know, immediately after closing, we can absolutely provide you that, but the original recorded copies will be sent about 4 to 6 weeks after your closing. I want to thank you all so much for attending Rainey's awesome seminar. I really, really appreciate it. I have my information on the screen. If you guys ever have any questions about title, or you know, need anything as far as the marketing goes, we'd be more than happy to help you out. We try to do the best we can to make sure that your property, when you put it for sale, is getting off the market as soon as possible. So we're helping Rainey with her marketing, and anything she needs to make sure that you are, you're getting your home sold as quickly as possible. You guys are in great hands with Rainey. I really appreciate you all coming, and have a great rest of your day. Thank you so much.
All right, well, thank you all for joining us today. I have to give a special shout out to all of my panelists. So thank you, Stephanie. Thank you, Eddie, as well as thank you, Erica, as well as Rob in his absence. You guys, if you have any questions related to the home buying process, if nothing else, make sure you guys reach out to these awesome partners that I have to have them in your arsenal. So whether you need them today, whether you need them years down the line, you will have someone to start you off and to be able to answer your questions. I can definitely tell you from my own personal experience, I have literally spoken to each of these individuals in some way, shape, or form, or their companies. And when I tell you, I have literally asked millions and millions of questions, and they have answered and given me a very well-rounded answer that I was able to understand and be able to grab. So thank you all again. And this is the end of the seminar. Please be watchful for more. Our goal is to be able to just educate and provide you guys with the knowledge you need to make an informed consent. And I will make sure I provide everyone's contact information as well as to their company in the description somewhere, so you guys will have it. So enjoy the rest of your Saturday. And again, thank you guys. Bye.